hold it with my hand, and then when I do this, let your breath go. Okay? And let's start with inhale. Exhale. Inhale again. You should be thinking about your day. What you want to learn today. How you want to grow today. Exhale. All right. Inhale. On this inhale, think about what you need. You want to accomplish. Why are you here? Exhale. Next one, inhale. Think about the things that could distract you, and let's go ahead and push those out of the way. Any distractions, let's just move them out of our thought stream. Exhale. All right, I'm liking the sound. Let's do this one more time. Inhale. Think about what you're grateful for. Gratitude. Where is your gratitude? Exhale. All right, so now guys, I want us to take our shoulders back behind us. Send them back. Keep breathing. Send your shoulders back. We're on our computers. We're perched a lot. Now let's roll our necks. You know, if you want to do these two things simultaneously. Okay, so guys, we are at SummerSlam 2026. This is the last day of SummerSlam. Put your hands together for the experience that you've had so far. Yes, so breakfast will be served around 9:30 when Lawrence is done with this session. And with that, I'm going to put you guys into the hands of the legend, Mr. Lawrence. And go stand, ladies and gentlemen, make some noise! All right.
One, two, 1, 2. Can everybody hear me on Zoom? Want to do a quick check? Can everybody hear me on Zoom nice and clear? All right, just want to make sure. All right, perfect. Just this. All right, so I want to thank everybody for coming out again today. And I also want to thank all the people who were able to join us virtual as well. So we're going to get started with our first session. This is going to be a sit-down session between me and a good friend of mine, B, where she's going to ask the questions and I have the answers. Last time we had a mentee link up. This was by far probably one of the best sessions because it was able to where I was less in control and more so with her asking the questions to get the answers that you guys are looking for. I know that sometimes when I'm speaking, I may speak over some people's heads, so I want to make sure that I'm explaining everything thoroughly today. We also do have a 2027 stock and options playbook. So directly after this session, I'm going to give you guys the stock and options playbook version 1. There will be a version 2 that comes out a little bit later in the year, but this is version 1. And it has around like 20 positions. Like I said, last year, we had 19 out of the 23 positions particularly hit. So I greatly appreciate y'all.
Good morning, everyone. How are you today? Good morning. How are you guys doing today? Morning. Good. Great. My name is B. Jackson. I was here last year at the last event. I don't know if you guys remember me, but I was here for some of you guys. Just a little bit about me. I work in real estate full-time and part-time. I'm a creator. And just to add a little graphic out into life, I love to facilitate discussions, to stimulate the mind, and podcasting and events like this. So we're going to get started with the opening questions. So Lawrence, before we get into numbers, what does fundamental analysis actually mean to you?
Yeah, so fundamentals is going to give you the basic understanding, principle-wise, of what the business actually does. So let's start like number one. Every business sells products, but when people are new and they first come into the stock market, what they don't understand is that not every business is profitable. So every company has a revenue, but not every company has an earnings. I want to solely make sure that my people focus on businesses that are actually profitable. And if you're going to put your dollars in stocks, like you're going to see on the 2027 playbook, you want to make sure that you believe that they can actually become profitable over the next year or two, right? So just using examples, I would say for me, like fundamentals helps you directly understand what you're investing in. And a lot of people in this particular space, they buy stocks like only off of prices. When the first time somebody comes into the stock market, they're looking for the cheapest tickers, right? They're looking for the $10, $20 tickers, but those companies don't have the best fundamentals. So you want to avoid investing in things that may be worth less than $2 billion, which a lot of times are penny stocks. So like penny stocks, they give people a cheap barrier of entry into the market, but it costs you in the end because those things are so volatile. One day they could be up 60%, the next day they're back down 40%. So you don't want to be invested in things that are that volatile, right? Where you feel as if you literally can't put your phone down, and you literally got to check your account every single day. Or you feel like, you know what, you're losing sleep at night being in names that are moving 40% up and down. That's just too fast and too drastic. So most people, when they come into the stock market, they also don't understand what the risk tolerance is. So some people are a little bit more risky. You also have to factor in your age. If you're in your 20s like me, you can afford to take on a little bit more risk because if you do lose, there's time for you to get it back. Versus someone who's in their 40s, 50s, 60s, especially in their 60s, you're looking at retirement. You're not looking to strategically wise, you're probably not going to be doing something as risky as me, where we might invest in a business that may be losing money today, but in the future it could end up being profitable. So you want to be mindful of that anytime that you're making investments that are considered to be high risk. So that's what fundamental analysis is. It's basically just knowing your risk tolerance and also knowing, okay, specifically what does this company do? What does it take to operate? How much does it cost? Does the cost analysis make sense to the risk? If more people took better time to identify saying, okay, I'm buying this investment at 200, knowing that I overpaid, they would make less choices like that because they would know that they would be overpaying. Or if they are going to overpay, they would risk less capital. So you don't want to put a lot of capital on a high risk move, especially as a new person.
What's the biggest difference between someone who knows how to trade a stock and someone who actually understands the business behind the stock?
Yeah, the two differences between those individuals is someone who actually knows the business and understands the stock, they're not going to call and ask when they should be taking profit. That's the worst decision that people make in the financial space, is relying on other people always to tell them, did we get out yet? Are we still in? If you're relying on people to tell you when to get in and out, you've already lost half the battle. Because now you don't have a trading view set up. You don't have a fundamental analysis understanding. So you're setting yourself up for failure because we don't want you to be in positions that you, one, can't comprehend and understand what the risk is. And that's the unpopular thing. the popular thing on social media is if I come out with 10 stocks that I know have a high probability of going up, and I just make a video and guarantee it, you know, there's going to be a lot of people jump on, okay, this is what I need to get in, but they don't understand the risk. So when you lose money, you feel like, okay, well, I lost money trading this particular stock, but I didn't understand it. That's the worst thing for a new person, right? You're putting your money into something you don't understand and you lose money. It discourages you. It causes people to say, man, I lost money on this. I don't know if I want to try that again. And it could be something that's a little bit disheartening as well, too, because now you're sitting there looking, should I have done that? Now you're having those second thoughts. So to me, I feel like the biggest lessons that you can learn is fishing by yourself. We had a couple of individuals in here yesterday, Remar and Cleve, while I was teaching, their MacBooks and their computers are open, they're trading. I'm watching Cleve, he's on the 5-minute chart. I think he was trading Caterpillar. You know, I could be right, I could be wrong, but it looked like he was trading. The piece of what I was saying that for is these brothers have came into this community and they learned enough to fish for themselves. They're not waiting on me to tell them when the entry and exit is. Cleve is texting me Sunday morning before the watch list comes on. Yo, this is what I'm looking at for the week. That's to the point that I want everyone to get to, so they're becoming self-sufficient traders.
When you're looking at a company for the first time, what are the first 3 things you want to know?
Yeah, the first 3 things that I want to look at, number 1, outstanding shares, which we covered yesterday. That's the number 1 thing I want to know on a company, is outstanding shares. That's going to determine to me if the stock can move in a fast or a slow pace. Number 1 thing. If I know it's less than 500 million, I know I have a potential stock that is a very fast mover and with the right demand can easily 2, 3, 5, and 10x. Number 2 thing that I want to know is its price to earnings ratio. I want to see, are you profitable or not? Because that's going to determine whether I want to trade you or not too. Not just long-term invest. Profitable companies are things that I want to actually take my money and pour them into, right? If the company has a low P/E ratio, I'm looking at it and saying, this is a company that I'm getting a discount on. So a low P/E ratio is anything less than 30. Once it gets over 30 and we're looking at a P/E ratio of about 150, 200, 300, I know that's an expensive company. So I look at it and say, I shouldn't probably be placing too many dollars in a name like that. 2 stocks that I can think of right off the top of my head. You guys are going to see me discuss one of the stocks, Tesla. I'm giving a little bit of a prelude into the 2027 stock and options playbook. Tesla, I believe, is going to go back down to $200. And it's mainly because when you sit at a high price and your earnings are not actually to the point where you can justify that, investors want to rotate out of you and take profit. So that's the number 2 thing. And the number 3 thing that I want to look at after I look at all of that is the technical analysis. I want to see what particular chart structure it's either set up in. Is it in an accumulation phase, public participation phase, or distribution phase? Those are the 3 things when I first look at a company. Outstanding shares, P/E ratio, market phase. So those are the 3 things. Outstanding shares, P/E ratio, market phase.
For the beginners, why do you believe investors should understand the business before they look at the chart?
Yeah, because if you don't, great question right here. And if you don't understand, so 2 things, right? If you're looking at the chart, all you're understanding is the price action. That's all you're looking at. All you're seeing is the numbers move up and down. And you're understanding the chart patterns. But if you don't know the why behind, because the stock may go up 20% after hours, and if you don't understand why, we used Microsoft as an example last week. Microsoft goes up after hours, runs. Why? Because they beat earnings. Once again, as a new person, you may not know what earnings is. This is also why just paying attention to the chart could be very misleading, because you could see something jump and think, oh, okay, it's running. So now it's time for me to get in. But if you don't know the catalyst, okay, what was the reason behind why? Was it an earnings beat? Did the stock drop because of an earnings miss? Was it a new product launch? Right? There's also things that we call upgrades and downgrades. So I respect a ton of corporate companies that provide coverage on the market, right? Because there's sometimes stocks could be down 10% in a day simply because it could have gotten downgraded or upgraded. So analysts provide coverage. And to me, that is things that those are things that I want people to focus on outside of just looking at the charts. It's combining everything together. Before you put your dollars into a trade, make sure you've looked at the fundamentals and the technicals. It makes you more aware.
What mistakes do you see newer investors make when they confuse a great company with a great investment at any price?
Yeah, I would say that, with mistakes that I see people make, particularly is over leveraging themselves too much, putting too much dollars into investments that they have no business doing, buying too high. So I'll use a couple of different examples. We'll talk about something for 3, 6 months up to a year. I'll stress it. Like I already know that I'm getting DMs and text messages from people like, yo, you're really hammering the crypto situation, right? Well, 2028 will roll around. Bitcoin will be back over 100,000. Ethereum will be 4 to 5 grand. MicroStrategy will be $200-300. And someone will come in and say, hey, it's a good time to buy. But in 2026, we're here at SummerSlam for the past 3 to 6 months, even longer than that, past year. Essentially, I've already illustrated what would happen. So when we did the 2026 playbook, we talked about Bitcoin actually coming directly down to these levels. So now it's here. And the thing is, from a psychological perspective, when people see things trade sideways for 3 to 6 months, they feel like, you know what, my money's not moving. But I always look at like the opportunity cost of money, all right? So you look at it this way. If you go and you spend money on products right now, and you get, you go and buy clothes, you go and buy shoes, you go and buy just different products. Once you use those, the value of them is already dropped, right? So you spent whatever money you spent. If you spent $10,000 on items, you spent $10,000 on items. That's going to depreciate over whatever time. And whatever thrill you have from it, so be it, right? You live one life. The reality is that we know that we need to beat inflation. That's what we know we need to do. We know that this system is rigged against us. Not just us as Black people, but all people. The system is rigged. Why? Because the Federal Reserve continues to keep printing money. So the only way to get out of, the only way to continue to climb and to grow your money is you have to invest it. Yes, in the right areas. So the opportunity cost, if I looked at me spending $10,000 on some BS versus me taking $10,000 and putting it into a brokerage account, yes, there's a chance that I could lose. But there's also a chance that if I don't make those moves, I'm going to lose anyway. So I look at the cost analysis. Money in a brokerage account, money spent on BS. Money in a brokerage account all day of the week. Because yes, I could lose money, but at least I have a chance to make money. Out here, cash is definitely trash. So the longer your money's sitting, opportunity cost is waiting. So you need to take the time. And here's the thing. You could get into a position and it falls 30-50% first. These are the conversations that we don't have enough. Can you stomach putting $10,000 into an investment into a great company? You might have bought it a little bit too high. It retraces down 20, 30, 40%. Now you're down $2,000, $3,000, $4,000. But that's an unrealized loss. You also, when you know the fundamentals, now you understand, okay, I'm buying at a better price. So I look at it, that's how I look at it. If the stock price is dropping, but the business is growing still, or at least staying the same, you're getting a better deal. So I don't care if none of the crypto positions fall another 20%. That means I have access to get more. That means the dollars that I have can actually stretch farther because I'm playing it from always a 12-month, 24-month perspective. So I'm not just looking at what the price did today, right? Because we can see things can change fast. last week, the NASDAQ had a 24-hour correction. This week, the S&P 500 made a new high. Just that fast. So that's my answer to that.
How do you determine whether a stock is overvalued, fairly valued, or undervalued?
Yeah, so one metric is the price to earnings ratio, but it's not the only metric. Price to earnings ratio is one way that I do evaluate, but it isn't the only one. Also, companies also have a price to sales. So you can compare that as well too. Now also net income. I want to see, okay, how much money did this company take home? Right, because you can have a company that has a good price to earnings ratio, but what is their take home? Also, how much are they spending? This is the good part about listening to earnings calls, and one thing that I went over yesterday. When you listen to earnings calls, one thing that you'll notice is you're not going to usually hear companies that announce, hey, we're about to increase our spending, right, by tenfold or 5x or even 2x. And the stock price may not take a little bit of a dip, right? Investors don't want to see companies overspend because it eats into the bottom line. So they want to see you spend the least amount of money to make the most amount of revenue, right? So I look at it from that perspective of if I can find that edge where companies are not spending, once again, they're not over leveraging themselves, they're not spending too much money, it makes it a lot easier. So companies that are always increasing their spending, right? Those are companies that you want to be a bit mindful of because eventually you could see a little bit of a nosedive. So as far as evaluating undervalued, right? Number one, yes, is price to earnings, but also number two, price to sales. Number three, that's when I factor in, okay, what's the price? A couple examples, right, that I look at particularly here now is names like MicroStrategy, right? One, MicroStrategy is getting down to about $70, right? So that's the floor where I believe I'm cool and comfortable to pay for that stock there. Having a predetermined entry price for equity makes it easier and seamless for you. Because now you can decide, okay, I chose this level to buy in and stick to it. But what if it goes lower? So be it. I bought at $90. It went to $150. It dropped to 60. From 150 to 60. The question I have is, can you stomach that? Can you stomach that drop from 150 down to 60 when you originally bought it at 90? Everyone talks about it now because MU goes up to $900 and when it goes past $1,200, right, all time, breaking over $1,200. But can you stomach that pain? Because it is going to hurt temporarily. The reality, it's also a mental battle too. So I also look at it of what can you do to be able to garner enough capital to be able to invest in things that you know you're sowing seeds in that's going to take time. Like for me, there's certain things that I want right now, but I'm like, hell no. Because I'm like, I gotta catch this next crypto wave. That's why I'm so big, because I already know I've already seen the power of what it can do. So while everyone's outside thinking, okay, well, let's have fun. To me, it's like, oh, you in your 20s, you should do this. I don't want to hear about that. Because I don't want to be looking at myself in the mirror in my 30s and 40s and be like, damn, I wasted time. Like, I don't want to waste time. Not when you know, not when you had an opportunity. Take the opportunity now. So I'm not going to wait. I'm going to take the opportunity now. And that goes back to the opportunity cost of money. $10,000 on fun or $10,000 reality. $100,000 on fun, $100,000 on reality of what you know you need to do. Because the world, we can sit back and we can have our debates about certain things. We just know the world is going to get more expensive. That's a fact. That's one fact we know, right? We could debate anything else, but we know for a fact the cost of not just you doing business, but the cost of you living is going to continue to go up. But also life expectancy is going up as well too. So that means you're living longer, and also the cost of living longer is exponentially continuing to increase. So you know you need more. So the only way to outpace that is by making a sacrifice. that's kind of like my mindset when it comes down to investing in. I gotta invest in the companies that are undervalued now, because sometimes these things can pass even before you even thought. Like, I mean, there's things that like CrowdStrike. I didn't even think CrowdStrike was gonna be up here this fast. CrowdStrike is basically pushing almost $900. Wouldn't have thought it would happen this fast, but it did. So there's certain things that time ain't gonna wait for you. It's just gonna happen and take place. It's gonna run. So you gotta be in to catch it. That's my answer to that.
Explain the PE ratio in a way that someone completely new to investing can understand.
Okay, perfect. So someone completely new coming in and is always hearing me, and like, yo, L is always talking about price to earnings in a new format. You look at it and you evaluate products all the time. You know that there's a product that costs $220, and you know this is a product that you want, but you know that that's paying a fair price. But if you see that product on sale for $140, you're gonna look at it and say, I was willing to pay for it at $220, but the fact that it's at $140, like your card's already flying out of your wallet. So you already know, like, okay, at $220, I was all in anyway. At $140, listen, where do I sign? That's just, that's the reality. So I look at the price to earnings ratio. It's going to help you know exactly where you bought it at. The number one thing that I see when dealing with not just new people, but also seasoned people that may have just not came into fruition with this, is overpaying for investments. This is why I don't really recommend any investments without context. Because it's easy to say, okay, here's the price target of CrowdStrike, or here's the price target of AMD, right? I personally believe AMD is going to go to $700 next year. But without the context, that you see, that's a blanket statement. So someone could write that down and say, yo, L said AMD is going to 700, not knowing what it would take for them. Data center revenue would need to increase. Also, they're going to need to increase not just data center revenue, but they're also going to need to sell more chips. There's a lot of things and components that go into why I would say something like that. There needs to be some strategical changes as well too. Profitability-wise, they need to add on another $2 to $3 EPS. So, like, those are the mistakes that I see people make, is they're just buying the prices versus actually knowing where did I purchase it at. Because if I know I overpaid for something, I'm likely not going to put an extensive amount of capital. You want to put more capital into an undervalued investment, less capital in overvalued investment. That's the easiest thing to say. So if you see something's overvalued, you can still put your dollars into it, just don't put a lot. Undervalued investment, put more money into it, because you have the better risk to reward. The risk is easier when it's towards the floor. The risk is higher when it's towards the ceiling, because you got so much room to come down.
Is a high PE ratio automatically bad?
Great question. So no, we have a couple different examples. A high PE ratio is not automatically bad. We'll use an example in A Lab, which is Astria Labs. They actually just reported earnings not too long ago, a few sessions ago. They were able to report earnings. So A Lab is a company that, once again, is in the semiconductor space. For those that are a little bit newer, right? A Lab provides the cooling for the semiconductor units, right? That's pretty much one of their specialties. So with Astria Labs, they were a company that particularly is overvalued today, but people are still buying because of future price expectations. So what they're realizing is people will try to make sure that they're purchasing names ahead of time, right? So they don't want to wait, because the thing about it is we have a lot of these algorithm trading. We also have a lot of people, retail traders, at an all-time high. Trading has become very much gamified. When I first got started in 2016, right, it wasn't as gamified as it is now. So 10 years have went by, and think about the level of access, right? Someone can just have a cell phone, open a brokerage account, boom. That even 15 years ago wasn't as easy.
You go back to 20, like the level of access to be able to get into the financial markets in the past 15 years has changed the game forever. So people are not waiting as much because every dip is truly being bought. Realistically, the 24-hour, I was making jokes about it, but it's real. The correction on the NASDAQ only lasted 24 hours. The correction that I saw take place in 2018 lasted 3 months. That means I was in college and I had 3 months to actually put my money into Meta, put my money into Apple, put my money into Shopify. You had 3 to 6 hours to get a wire transfer to your brokerage account if you didn't have any liquid cash in the brokerage account that you wanted to take from your savings and add it to be able to buy. I'm making that joke because that's how fast it moved. Next thing you know, you blink twice and the Qs is up 40 points. $40. It would take, just to put this into perspective for people, back 10 years ago, 8 years ago, $40 moves on a QQQ would likely take a year, realistically. You're seeing that in 3 sessions. So that's how much faster the market is moving. It went from moving like a snail, right, to literally a gazelle. So that's literally how the market is moving. So you must take advantage of the discounts as soon as they're readily available. So staying with some cash on the side and also raising cash when the market is hitting all-time highs. So we go back to the end of May, and you can also, here's one trick that I'll tell you. You can also know when it's time to take profit off of behavioral psychology. And I'm not a behavioral psychologist, but this is something that I've studied, right? Particularly, you can tell by the amount of jovialness and happiness from people, that will tell you when to take profit. When everyone's talking about they making money, when you go on this cell phone and you got 10 guys that's coming on Twitter and all these different places, right? And they telling you they made all this money, just go to your brokerage account and press sell. That is literally the time that you want to, when you got people that's pivoting from different industries that's claiming they traders now, that's when you know it's time to press sell. That's reality, behavioral psychology. When everyone's celebrating, I'm making money, I'm making money. It's like the easiest thing to sniff. So I sit back and just watch. Like I could tell you off of social media when it's time to take profit. The end of May, that's all I saw. So where I knew at the top of June, I said some things about to come down. Very much, things come down 30, 40, 50% like that. Why? Because what happens is that a lot of people want to learn the stock market when it's at an all-time high. But the best time to learn the stock market is when it's down. When it's down 20%. Because then I can more easily recommend and tell people, boom, these are the things you want to buy now instead of saying, hey, wait so much till later. But me saying wait till later is to really protect people's capital. Because if you're buying something at 10x in 2 years, you want to be a bit careful. Because that stock has already went from undervalued, potentially now to overvalued. And as a new person, not having a Yahoo Finance account, not having the fundamental prowess that I'm teaching you here now, does you a disservice to where you don't know what you put your dollars into.
What would justify paying a premium valuation for a company?
Yeah, so what would justify would be you willing to assume the risk. So we'll use Tesla, for example. Tesla is a stock that currently is not delivering on what they said they would be. Tesla's supposed to be doing 1 million cars deliveries a quarter. They're still doing 400,000. They're also a company that is not consistently actually generating positive earnings that is enough to grow the company in a high fashion. So an example of this is you would be willing to bet your money on Elon Musk. So if you want to bet your money on Elon, so be it, but no, it's a high risk. So that would be a justification to where you could assume the risk, but just know Tesla has a chance of dropping 50%. But it also does have that shot of going to $600, $700. But But you have to ask yourself, does that fit my risk tolerance? I think for most people, the answer to that question is no, and I can answer it for them.
How do growth expectations affect the price investors should be willing to pay today?
Great question. So a company right now could particularly be earning $5 EPS for the past year. But if they're expected to earn $8, which would be essentially a growth of 60% in the next year, investors may be willing to ignore the current valuation, saying, we're willing to pay for this business or overpay today because future profitability is expected to increase. So some investors are willing to overpay, and that's fine. But if you're going to overpay, have an idea that, okay, this stock is actually going to increase their earnings by 60%. That would be why someone would be willing to overpay. So that's my thoughts.
Can a great company still be a terrible investment if you purchase it at a wrong valuation?
Yes, it can. A great company can be still a terrible investment because it's about the price that you pay. So you may have gotten a good company fundamentally, but just at an incredibly high price. We'll use something like United Health. United Health at $600 was still a fundamentally sound company, but they had some structural issues. United Health ended up dropping from 600 all the way down to 240, right? And you could overpay for something and be left holding the bag. United Health is still at 400. Who's to say when it goes back to 600 if that happens? You would be hopeful for, but we all know that being hopeful in the stock market is the #1 drug, which is hopium. So you can hope for it, but you did have a great company that you did pay a fair price for, but the company fell short. So you can still lose. It's a good question.
How do you develop what you call your perfect price or preferred accumulation range?
Great question. This is a question I get asked a lot, and it comes down to your risk tolerance, #1. And then #2 is when you look at perfect prices, once stocks get below 15 P to E's and they're trading with 8s, 9s, 10s, that is where the business is now trading at such a point it's undervalued that investors are saying, no, it can't go no lower. So these are why names like Adobe, funny enough, Adobe is a stock that I'm recommending for 2027. But Adobe came down to like $180, CRM. Also, you have Meta Platforms at $90. I'm just using some core examples of when a stock is below 15 price to earnings, that is where it is now significantly undervalued. So if I see a stock with a 9, 10, 11 P to E, that's a steal. That's like something on the discount shelf, just using an example. The price is marked down 60%. It won't be there too long. So you should be grabbing as much as you can as possible. You should go ahead and clear the shelf and don't let no more customers get it. It's like a tug of war. Like, oh, she got the last 3. Yeah, I did. And you're not getting it either. That's essentially what it is. I took the last 3 items because I know what the value is and you're not getting it. And I'm already at checkout. I'm already out of the store. So that's how quick you bought it.
Scenario. If a stock is trading at $200, but your fundamental analysis tells you it's worth closer to $120, what do?
Don't buy it. Simple answer. Don't buy it. I don't want to overpay. But then the other part comes in. But what if it runs without me? So be it. If your analysis tells you should be paying 120, don't pay 200. But what if it runs? There's more than likely a better investment that's out there that more so fits your risk tolerance. Because the worst thing to happen is you buy it at 200 and then it goes to 120. Then you say, why didn't I wait? This is where now the psychological part takes over. So stick to your script. That happens sometimes. Like one thing I'll say is you can't catch everything. That's the reality. You cannot catch everything. And I really think that a lot of times people try to catch everything, and it hurts them. Like, I'm cool if something takes off without me, because I know you can't get everything. But when you focus on what you want and what you can get, and you stick to your thesis, it pays off every time. I can't wait until 2 years from now, 2028, we're looking at all this crypto stuff. MicroStrategy's at 300. And it's gonna be people that's ready to buy, and I'm gonna be ready to sell. That's how the market works. You buy when no one's talking about it, and I'll be ready to sell to them. They can have it. That's the philosophy you gotta have. That's the way the institutions work. All the things that they're selling to you at their high point, they wanted you to buy in the beginning. That's my thoughts.
Last question. How important is patience when the company you want doesn't reach your preferred valuation?
Yeah, I actually want to go back to a story. This was in 2018. And I was in college, and I remember I was getting ready for a Broadcom earnings report. So this is when Broadcom was $200, but this is the original $200, not the, so basically it's essentially $20 today. And I remember having about 300 shares of Broadcom in college. And I had $200 a share, right, which is now 20. And I remember just being frustrated with Broadcom. And it put me to the point where I was just like, yo, Broadcom's not moving. Their deal with Apple at the time in 2018, they had $1 billion deal with Apple that just re-upped. And it was frustrating because that was truly one of my first 3 corrections. And I remember AVGO coming down. So seeing it retrace 30 to 40%, this is within my first 2 to 3 years in the market, and it was painful, right? From the perspective of this was a company that I put obviously a bigger bet on. And when the stock came down, I was so disappointed. And I ended up selling half my position just out of frustration. So keeping 150 shares. And I look back to that when you asked about patience. I'm not even gonna go and do the mathematics. I just know that's a 6-figure investment on that part of those 150 shares missing. The piece that I wanna say is if I would've been more patient, you sometimes get so much caught into the day-to-day movement. And this can also be some of your life's pressures too. Like having a real conversation today is life is gonna pressure you to where you gotta make moves. If it comes down to liquidating a brokerage account, or maybe having to do a little bit extra, choose the extra. Don't take your money out of the market because of frustrations you may have, right? Or taking your money out of a particular equity, right? And do a little bit more. So that's why I say keep your head down. Everyone, if you can sacrifice a few years doing things the right way, it sets you up for a great future. Like I said, life expectancy is increasing exponentially. We know that every day is a gift from God, but at the same time, we know that life expectancy is increasing. So you plan to be here a while. We don't want to be in our older age and not have nothing. And that's where I fear a lot of my peers are going, right? A lot of my peers are only living for today, not for tomorrow. And it's not necessarily just by choice either. A lot of it is the societal constraints of you can do all the right things, you can go to school, get the education, but the job sometimes isn't paying enough for you to actually do all of this. When it comes to the American dream of buying a home for people my age, it's far-fetched. Even doing things all the right way. But through this process of investing your dollars, you control more of your time and more of your future. And you get a break away from corporate America, which a lot of people want to escape. They want to use corporate America for the capital that they provide, as you should. You get the degrees, but then sometimes it's not enough. And that's the pain point that I have, particularly here, because I see it. So if I see something, I want to put a resolve to something. The resolve is each and every single, not just play that I put out, but long-term thesis investment-wise. The more capital you have, the more you're able to control. not just dollars wise, but control your time. We only get one life. And one thing we always say is we wish we had more time. Well, now you got an opportunity to have more time and actually can control. So that would be my answer to this. Patience pays you. And if you don't follow patience, it haunts you. It's a nightmare. So that's my thoughts. Any questions before we move on from anybody? Questions. All right, if we don't have no questions, we'll take 5, and then I will come back with the playbook. So I appreciate y'all, and let's get ready for this 2027 stock and options playbook. All right, testing. Should be good. Let me press record on this thing. All right, guys, so we're about to go ahead and get back started. So we are about to officially drop our 2027 stock and options playbook. So I do have the stock and options playbook up here. Go to it. There we go. So a couple groundkeeping things. So how every 2027 position is set up and structured. So number one, time, target 6 to 12 months until expiration at entry. Correct, I will. Nah, it's not gonna go in the Discord. Nah, I'm being sarcastic. Well, nah, Tony, you know it's gonna go in the Discord. I'm just trying to. All right, so we good? So how every 2027 position is going to be structured is time, number one, target of 6 to 12 months until expiration at entry. So any position that is recommended, I want you to have at least 6 to 12 months worth of time. So we're not going to short date anything. Everything is at least going to be in between that range. So it could be 9 months. We're looking at contracts out till June of next year, as well as January. Number two, we're going to prefer in the money call options with approximately 60 to 70 cent deltas. So please put that down. In the money call options, 60 to 70 cent deltas. Entry, predetermined, do not chase. We're gonna wait on technical areas. Any position from the 2027 playbook, I will directly let you know when I enter. And the price paid. So you'll get the price paid, the entry date, everything's gonna be documented. So I do have a couple more announcements before the end of today's event that is gonna help out everyone. Risk, number 4, and the announcement, everything is that I do for this announcement will be free, by the way, too. Risk, control the position size, theta exposure, and thesis invalidation. Number 5, scale profits into strength. That means when we see green and things hit certain targets, we're closing the positions. We're not waiting on market to go back negative to take profits. So you're going to take a look at this board here. This is going to be 23 core positions. We're going to stick with the number 23. So we had 23 positions in the 2026 stock and options playbook. Of those 23, 19 of them were successful. So let me move out the way real quick so everybody can get this. This will go directly into the Discord as well too. So it will directly go there, but I'll let everybody get a photo. Now, these are the preliminary, this is the preliminary list. Exact strikes, entries, and targets and invalidation levels can be finalized as these setups develop. So you are going to get more context on all of these. Number 1 on this list is going to be Adobe. Number 2, SanDisk. Number 3, MU. Number 4, Microsoft. Number 5, AMD. Number 6, Oracle. Number 7, MicroStrategy. Number 8, Kobe Bryant. EU, 2x leverage, ETF. Coinbase. Tesla. We're referencing a reference level of $200, and I'm going to explain every position wholeheartedly. Kano, which Coinbase and Kano go together. CRM, Nebus, Snow, Eli Lilly, United Health, Coherent, EPAM, where's Kayla? There he is. All right, Rubric, Carvana, CBNA, Hood, Robin Hood, Caterpillar, where's Cleve? Back the truck up, right? CEG, Constellation Energy Corp. So these are the 2027. Now let's get into it. When you talk about Adobe, Microsoft, Oracle, CRM, Snow, EPAM. So let's talk about first, Adobe first. Preliminary plan. Long dated calls from here. Stock price is currently at $260. The fundamentals, valuation, entry, technical entry. So write this level down for Adobe, 273. That is your key technical level for ADBE, 273. Now, after 273, you're looking for a gap above on Adobe, back over to 300. 273 is the last level that needs to be broken, really, for Adobe to get back to 300. So fundamentals, valuation, and technical entry. Size appropriately, control your data, scaling the profits. Scaling the profits. So I want to speak about this. June of next year, call options for particularly Adobe. June and further. In the money options, target, looking in between up to 320 to 340. Microsoft, which you should be seeing. Microsoft, a lot of people took advantage of a little bit of MSFU. Microsoft was the dark horse this year where it was really slept on a lot. Microsoft and as well Meta, where they kind of took a back seat to MU. They had to see MU and AMD basically MU almost took over Microsoft in the NASDAQ holdings. The NASDAQ holdings almost had MU higher. So this was particularly an equity preliminary plan, the longer dated calls. We're looking for a price target on MSFT of 575. 575, particularly for Microsoft. Oracle, which we didn't quite get $100, but you did get 120. Oracle, we're looking for a price target on this of $200 to $220 in 2027. 12 months out in the money call options, 60 to 70 cent delta. Salesforce, reference range, put this down. 230 to 260 is going to be your range, particularly for Salesforce. Now, Snowflake, $400 price target for ticker SNOW. How many people in here took advantage of Snowflake less than $200? Few people in the building, right? Got Snowflake less than $200. So now you're looking at Snowflake with a $400 price target. And now let me go ahead. So CRM, you're looking to come back in between this range, this 230 to this 260 range. So Salesforce, also put down this key level of 209. 209. So a break back above 209 can start leading you back to the 230 to 260 zone. So put that down, 209. SNOW, Snow, which is already at 330. Now, there's a reason I want to talk about this 400 real quick. This will be the first time getting back to 400 since 2021. So we're completing this break of structure. Snowflake was one of our better positions. It also of 2026. It was a part of our 2026 playbook. So as part of this year's playbook, so for ticker SNOW, expecting another $70 increase on turn of profitability. Snowflake in 2027 is on pace to have their first profitable year as a company. First profitable year as a company. So if you look here on the technicals, where we're at now, this 330, you got Snowflake is approaching this February 2022 high. So a break over here, there's a big gap, right? Up here to 358, right? And then after that, you're looking at about 377. And then 405. So we're looking for $400 a share, particularly on Snowflake. So I wanted to give you guys a couple of technical things based upon that. There we go. Skip you. There we go. So EPAM, this is the ticker particularly that Kaven wanted us to look at. And particularly EPAM was a name that upon doing my own further research, and we appreciate Kaven for that. You look here, shares outstanding number is less than 100 million. So you got 52 million. Kaven, I want everyone to give Kaven a round of applause. Right? Because one, this is what it's about. He's given us a stock less than 500 million shares outstanding that has basically 52 million shares only outstanding, 789 million in cash, very little debt, revenue of about 5.62 billion. I want to come to the analysis tab because this is a low float and this excites me. But I come here to this and I see that we're expected to earn $13 EPS this year. A year ago, we're now also looking at $14 the next year. So this is a company that is a smaller market cap company, but they are profitable. If you look, which we'll do now, EPAM Systems has fallen and is down in the past 5 years about 80%. So it's already shown us the potential to be able to go up over time. The company is at a fair price to pay. Right, this is a stock that has considerably dropped and is now down here to $4 billion with a $12 P to E ratio. 12 P to E ratio with an EPS in the past 12 months of about $7.37. So I like EPAM as a 2027 stock and options play. So I wanted to provide some fundamental context and you'll get more. Once again, this is just a preliminary 2027 playbook. We thank Kaven for that one. Right. Second. So now I want to go to SanDisk and I want to tell you the levels that you want to actually look to pick up SNDK to execute this move. So SanDisk is currently at $1,200. I want you to put this range down, 6 to 800. Go ahead, bro.
Going back to detail, can you cover, I seen that it had 112% institutional ownership. Can you cover that?
At a later time.
Okay.
I got you. So when you look at SNDK, so I want to cover this real quick here. 6 to 800. So 6 to 800 is going to be in between range that you want to pick that up. Right? 6 to 800 is where you're going to want to do that. 6 to 800. MU, which is also on this list, $600 a share. So particularly, I believe both equities you're gonna get given, I think Morgan Sanders could probably bottom around 867. MU, we're still looking for this name to pull back down, give us a pullback to about $600 a share. That is a great entry, and it's about a 50% retracement. So particularly, I still believe that you have a shot of getting MU down there at about 600 and change. So 600 and change down here for Micron Technologies. All right, so we also have AMD. So Micron and SanDisk are as well, but you want to wait for those price entries before getting in. So Micron, I want you to wait till we get down to 600, and particularly SanDisk around the $800 area. You may get a move down there to 600, but around 800. Nebis, we have a 300 to 350 price target, particularly on Nebis. Nebis has been going back and forth between trading in the higher 100 levels and early 200, but we're looking for about a 40 to 50% jump from Nebis price target wise, mainly because due to earnings expected to exceed expectation, and Nebis is actually starting to become consistently profitable. So Nebis, 300 to 350. Coherent Corp, longer dated calls. Coherent, the perfect price range between $180 to $220 for Coherent Corp. Same practice and setup. Coherent Corp, we're looking for, though, a target of about $450 in 2027. So $450. Now, we're going to talk next about the crypto and high beta financials. So these investments do come with more significant risk than the other investments that we've listed so far, right? They do come with a more significant risk, but also a higher reward. This part is where I believe majority of the reward out of the playbook could really lead you, especially with some exponential growth. MicroStrategy right now is in between, going back and forth between $90 and $100. There's a couple different strategies that I do want to suggest though on some of these next tickers that I'm about to go over. Particularly on MSTR, you can do what is a cash secured put. So the goal to own equities, being that they're $100 a share, or even a name like Coinbase, which we'll get to, but MSTR, MicroStrategy, is very easily one of the best positions to take going into next year, right? And as well in 2028, to also already be in it, in preparation. So MicroStrategy, Bitcoin costs you 60 racks, MicroStrategy costs you $90 right now to get exposure. ETH, Ethereum U, was just having a conversation about this on break. ETH is $16. Last time when particularly we saw here, Ethereum peaked out at about $5,000. And that was actually last year in August. Peaked out at $5,000. Last year, August, ETH was almost $200. It's $16 now. So as Ethereum has came down about 60%, you saw ETH dramatically drop because of it having a 2x leverage exposure. This is when we talk about risk to reward. $16, $10. Risk to reward. Ethereum goes back to 3,500, 4,000. Easiest thing you could do is bulking up on ETH. Put money aside consistently. Easiest thing that you could do is buy more ETH going into this next calendar year. Coinbase, we covered this a little bit yesterday. Coinbase, the same thing as MicroStrategy, anticipating that this lower 100 area is going to be the bottom. So we're looking for next year, probably about 220, in my opinion, will be the high for Coinbase, 220. Kano, which is the 2x leverage ETF, costs you about $4 to $5 now. Kano, we believe, can easily 5 to 10x, just like AMDL did. So Coinbase right now is at 100 and change. When Coinbase goes back to the higher 200s, early 300s, Kano will 5 to 10x from where it's currently at. Robinhood, we're looking for a target of 140. 140 for Robinhood next year. $140. 2028 preliminary target of 175. So we're looking for 140. Now, particularly, skip over those for now. I want to get Eli Lilly and as well UNH. Eli Lilly and Company, 1,500. Currently they're at 1,100 to 1,200. So Eli Lilly, 1,500. United Healthcare, $500 price target. Both Eli Lilly and as well United Health. Earnings anticipated to grow between 10 to 20% year over year. So we want, like I said, we want you to have exposure into as well healthcare. The rise of UNH, it's back to the upside. Currently, the stock is at about, we peaked out at about 463 this year. A little shot after hours on July 16th. But we have it here at 502 after a break over 460. You have 485 and then 502. Now, also on United Health, this is a company that has been able to consistently beat earnings all year. They're also anticipating that 2027 is their complete turnaround year. So 2027, United Health, a move there to about 500. Then we also have Constellation Energy, CEG, which you have 6 to 12 months worth of time. Constellation Energy Corp, a target of 375, which is about $100 higher from where it currently is at. So that's 375 for CEG in 2027. Mainly, when we do look at Constellation Energy Corp, the main thing that I would focus on, and on CEG, energy-wise, consumption. Energy consumption expected to continue to grow in this country. Electricity, as far as use for data centers, expected to hit 25%. Data centers are going to be using 25% of this nation's electricity in the next 5 to 7 years. Caterpillar, $1,200 price target. Cleve, Cat's trading at what right now? All right, so that is about a 25% increase expected next year. So 1,200, we hit a peak of about 1,100 this year, retraced a little bit. Let me give you guys the level that I believe we could potentially see if Caterpillar actually dips a bit more. It's right around 771, which is really around 772. So it's about another 70, maybe to another $100 is what I see that you can see Caterpillar fall. Right around here in this area is where I believe they're actually going to bounce. So I don't see them going no lower than 700. So that would be about a 30% retracement. So getting down there on CAT, really great entry point to buy some longer dated calls over the next year. We're expecting a $1,200 price target at least by the end of the year of 2027. That's $1,200 for CAT. And then we also have Rubric, which Rubric, we're going to assign a $120 price target, particularly on Rubric. So we also want to finalize the 2027 playbook. So obviously there's a good bit of plays. These are the steps with my cursor, right? Set preferred stock entry and accumulation ranges, which you're going to get those. This is just our preliminary. Also, setting the 2027 upside targets and downside. So you got upside, we're going to give you some downside. Number 3, choose preferred strike ranges and expiration windows. So choose in between those particular option strikes and expiration dates. Number 4, add fundamental theses, specifically, which we've added, right? And then number 5, technical triggers and profit-taking frameworks. So at your target, that's where you want to take profits. So those particular targets is where you want to exit. For example, Adobe, 320, 340. That's an exit, right? CRM, 230, 260. So you guys are going to, I'll drop this playbook, particularly in the Discord, and then you guys are going to get more editions of it, right, over the next couple of months. But anytime a position is taken, you guys can also check here. It will be posted in the tab directly that only it will change. You'll see it right underneath here. It will be a separate tab created that says the 2027 Stock and Options Playbook. So this will be right under here, underneath information and resources. So right under here and underneath information and resources is where you could directly find it. Underneath the 2026 Stock and Options Playbook, it's going to be right underneath here, 2027 Stock and Options Playbook. So you'll get all of that, plus any classes that we have based upon that will be directly posted within that tab, all right? So we're gonna take a quick 10, and then at 10:30, I'm gonna introduce someone who's gonna come and take over and teach you guys a lot of game when it comes to this SPX and day trading, which is a very great skill to have when done right. And the person I bring up, she's one of the coldest in the game with it. So I'm excited to have her in the house. So I appreciate y'all, and we'll be back in 10.
Alright, alright, so we're good.
Does that sound good?
I think so. I hear the echo. Hey, hey, hey.
One, two, see how it sounds.
Testing, 1, 2, 3, testing, 1, 2, 3. Yeah.
Oh. All right, y'all, we're going back started, so, not a day trader, right, but who you have before you, someone who I consider to be one of the best day traders, particularly the SCA, right? And I had a couple, we've known each other now, so we've been about like 2, 3 years now.
I think so. So,
And I remember when I first met you, just seeing your growth, right? This is a woman who, and Hannah, who is speaking all across the country now. You know, we just did an event in Miami, what was that, I think it was April,
yeah, yeah.
right? And I love seeing all your hard work. This is exactly like what I want my daughter Kendall to be like, right? So when I'm teaching Kendall, I envision her being just like him. So I want you guys to give Hannah Marie a round of applause because everything she's got to go through is super important to know, and she's teaching you about directly risk to reward, right? And she will directly show you how to use it, right? Her techniques actually profit on a day-by-day basis. Like I said, a lot of people are interested in day trading, which is something that can be very profitably done, but it takes a considerable amount of risk management and control. So I'm gonna turn it over to you guys. Let's get to it.
Cool. Well, thank you for the introduction. I'm so honored to be here, blessed. Thanks for trusting me, all that other stuff. So getting into it. So my strategy. Today we will be live trading SPX, getting into it. As much as I love SPX, I will start off by saying first and foremost, risk management is going to be a saving grace every single time, because as much as I love it down, it might not be the most appropriate, but I always refer to it as my rich baby dad. It gets a little toxic. It's very volatile, which is perfect for me. Ooh, it's perfect for me simply because I like doing something called scalping. So I'm typically in and out of my positions within a couple of minutes. A lot of times out of the positions within 15 minutes, a lot of times a strong majority is going to be within an hour max. I look for two things. I look for strength. I look for momentum and signs that we're going to be pushing quickly. And then from there, we're able to maximize on profit. And then we're taking our money off the table. I'm big on doing something called outs and reentry, meaning I'm taking profit. The second it starts showing signs that it might reverse in the other direction, which we're going to get into the setup as well. I'll share like key signs on SPX that it might do so. And we can actually utilize today as an example. And then from there, we're taking our profit. In the case that it continues, I'll simply do a re-entry. If it goes the other way, we can get the reversal in the other direction. So getting into the strategy super quickly before we start day trading, I do two things. I utilize two strategies and then I've combined them into one, kind of into its cool little mixer, so to speak. So the first one that I like utilizing is going to be the strat. So the strat, the reason why I like it is because it really simplifies price action. I'm really big on honing down into the basics and the principles and running with that. I like simplicity in absolutely everything within my life. I like it to be super straightforward. And for me, it's going to be all about perspective and perception. But for me, the strat does that. So the reason why I like the strat, or the three key principles within the strat, is going to be that it can do, the market can do one of three things. It can create either higher highs or lower lows. So that's going to be one or the other. That's going to be this candle on the 15. It's going to be the basic green or red candles that you see in the chart. The second principle is that it can create both higher highs and lower lows. So that means that it took out the high and the low of the previous candle. And then the third thing, one of my favorites, is going to mean that it creates neither a higher high or lower low. So that means that basically buyers and sellers are still fighting. No direction was necessarily able to be chosen. Winner was not named. So when we get that, it's typically not going to be clean price action. It's going to be pretty consolidated. It's not going to be the price action that we want to trade, especially if we're looking for those high momentum trades. So that's the basics of the strat. And then from there, I'm just giving a rough overview. And then from there, we'll go through higher time frames and the setup that I have for the day. And then we'll go from there. The second strategy that I utilize is going to be Heikin-Ashi. So the strat, it really simplifies what buyers and sellers are doing as a whole. I like that it uses real candlesticks, so I can see the raw price action as it's forming in real time. Heikin-Ashi, I like it because it really cleans up the price action even further. Within Heikin-Ashi, it does one thing that I absolutely love. It creates a key area of what should be supported to let you know that buyers or sellers are still dominating that candle. In essence, it lets you know that they're still in control, and you can know that it's safe to stay in. So utilizing today as an example on Heikin-Ashi, all of this price action right here, where we have those wicks in both directions, that's not going to be price actions as scalpers that we want to enter in on. Versus we see this, or this candle. I was actually looking at the puts this morning because we have a gap going down into 77.10. But we see this candle, we see that it wicked really strong into one of our targets going into 77.20. And then from there, we see a stall out. Following that stall out, what do we immediately see? We see a doji pop up. That's going to be important for scalpers because when we get that doji on this Heikin-Ashi screen, that's going to mean that in this case, buyers came in and they took out that area, which should be supported for sellers if they were going to maintain that strength and momentum. And then immediately after, that upside bounce happened. And then we had more so a fake out, creating that 3-bar, that outside bar on the 30-minute time frame. So I like that the mix of the two strategies simply because it gives more of an edge on SPX. Because a lot of times SPX can look really clean and then it'll do the opposite, same as this morning. So getting into my overall setup for the day and then going into trades, potentially depending on price action. So just because I am in the market at faster time scales does not necessarily mean that I'm entering just randomly or off of happenstance or off of emotion. I am very logic and reason based versus emotion. The second I start feeling too many emotions, like if I'm like chasing, FOMO, revenge trading, whatever the case may be, everyone on my daily live call outs know I gotta take a breather. I gotta put myself in timeout like I do my 6-year-old and take a breath. But long story short, we're still going off of higher time frames and running with that. So going off of the higher time frames on SPX, key thing I was looking at going into the day, I'll maximize this 4-hour chart, is we had an inside bar on the 4-hour. So that means that last 4-hour candle that opened at 1:30 yesterday, going into close, it created neither higher highs or lower lows. So the previous candle's high was going into 77.42. Previous candle's low was going into 76.98. It wasn't able to take out either of those levels. It stayed inside of the confines of that candle. So a break of the high, that opens us up for calls. So that's why this morning I had a key call level at 77.20. Another beautiful thing about inside bars on the strat that I absolutely love that it does is it gives us a clear area to target into. And that clear area is going to be the high or low based upon the direction that it breaks of that previous candle. So in this instance, we got that breakout at 20. That would have provided, it got a little iffy because pre-market had already went up, but we had a break of 20. That key target to bring the market into was 45, was going into 45, that previous candle's high. In the case that we would have broken downside, it was a little bit tighter. We would have gotten a break going into 77.01. Key target would have been 98. So I went ahead, since it was so close together, I went ahead and had 98 as my key put level going into today. And then we'll focus on inside bars, since it looks like that's what we're currently facing in current market. So that's the 4 hour. The daily, we have a doji. So that's going to mean that we close very close to where we open. It's going to represent indecision in the market. Weekly, the weekly has higher highs. We have new highs on the S&P. If you look at the month, we can utilize that as an example for another inside bar. The previous month right here, it formed as a hammer formation. So that was a sign. But then we formed the previous month of July. We formed as that inside bar formation doji, a break of 75, 75. That key target brought us into 76.15 off of the strat. And then from there, we wanted it to hold above, or we would have wanted it to hold above. And it's obviously done so 2020. So I still look at the higher time frames to manage my positions and look for trades. I'm still watching slightly higher time frames. So that's going to be 15, 30 an hour. I like looking for setups on those time frames with the strat. So I look for 5 things when it comes to the strat. I don't get into combo setups. I don't get into the 2-1-2, all that other stuff. Again, for me, I like simplicity. That gets a little bit too complicated for me. I'm really big on the basics and principles as far as prices forming. So I look for 5 things. I look for inside bars that we just spoke about. I look for outside bars. With outside bars, we're ideally going to be wanting them to close. There is a way to trade it, but it's slightly more risky just because the outside bar, it basically means that it faked out in one direction prior to going into the opposite direction. So I look for inside bars, outside bars, hammers. That's going to mean basically sellers push price down from there immediately after buyers push price up. So it's a sign for calls in the market for stock options or buys. And then shooters, that's going to be the vice versa of it. That's going to mean that buyers push price up, sellers immediately push price down. It's going to have a larger wick to upside, shorter body to the downside. And then dojis, that indecision candle and break of those. So I look for setups on that. And then very simply put, once I find my trade, I like writing it out using the Heikin-Ashi. And then within Heikin-Ashi, different alerts that I have on or indicators. I love VWAP. I love VWAP down. I love that it provides key points of controls and it like lets you know areas that it can bounce into. Any questions? Because I'm not loving the price action right now. I probably have like another 1 minute. I want to analyze how this 15-minute closes. So any questions on anything I said so far? Yay, nay? Not all at once? Yes.
How many indicators do you, well, I guess a warning sign do you let pass for like if you hammer the doji, do you know what I need to do next, or do you see one, you know?
If I see like a strong setup, especially like if it's formed on the hour, like I'll use this one as a sell. This was a trade. Like we had this shooter formed on the hour, and then immediately after, hey, like the market is up, but I've been anticipating puts like all week just because I'm really big on honing in on the basics and the principles. One of the biggest basics of there is that there's 4 main parts of a candle. We just had a new week, we just had a new month, and so the four main parts is gonna be open, close, but it's also top and bottom wick. And right now, we have no bottom wick on the month candle. So I've been looking for signs for puts all week despite the current upside. But long story short, we had this shooter appear on the hour, and then immediately after, we were able to take puts. And then we simply wrote it out utilizing Heikin-Ashi. So let me go to the 5 minute. I think that would have been around this area. I knew 15, there's not much of that bottom wick that we just spoke about. So I am watching that. And then we'll lock in just a second. So a break of those lows, we were looking for signs of puts. And then that's the 5 minute time frame. The 1 minute time frame would have looked completely different since it's drastically a smaller time frame. And then I like utilizing EMA on the one as my catalyst, because the 1 minute, even though I like the Heikin-Ashis to be supported in my perfect world, are we gonna get that on SPX every single trade? No, unfortunately, but I like using EMA on the one. So technically speaking, like for those that wanted to give the trade more room, as long as we didn't start holding above that EMA line, they could have stayed in. For me, again, I'm big on outs and reentries, so more than likely, if I'm not mistaken, I would have taken multiple trades off of it. Especially because I'm big into time frame analysis as well, which is basically times where we typically get retracements on candles in the market. I know there was another question. Oh, okay, it was the same. Gotcha. All right, well, if any additional questions pop up, definitely let me know. Because I'm not in love right now. How you trade the 3 candle? Okay, yeah, for sure. So the 3 candle, it gets a little bit iffy. Simply because it represents that manipulation. What I would do is I'm big on when we get into trades, or when we're looking to get into trades, not just getting in, but looking for a break and hold. So we'll also highlight this candle's high right there. We'll sync that globally as well. And then I'll go ahead and maximize the 1 minute again. So you see right here how this candle at 9:45, we have wicked into the highs on Heikin-Ashi, but we don't have a fully supported Heikin-Ashi above it. That's our key call up or our key TP for the day, where the market needs to hold above if calls are going to continue. So with that was still no entry. And then from there, we see that it flirted with that upper band on VWAP, that point of control for calls. It bounced back up, tested into that 45 level. We still weren't able to get a break and hold. Immediately after, we started wicking back into that EMA on the 1. So if you wanted to scalp it, you could utilize that. I like utilizing for my best scalps. I like them to react from some area of VWAP. And then from there, I like it to hold underneath that EMA line. So I would look for it to be supported. So from upper band on VWAP, key target would have been going into midline on VWAP. We would have made sure that it held underneath. In the case that it started bouncing, we would have looked for signs for it to go back into upper band on VWAP. And then from there, if it held underneath, which it did, next target would have been going into lower band on VWAP, which it got into. So you don't necessarily have to wait for the 3 bar to close. Sure, it's not you, but I'm saying, like, I mainly say for my beginners, I'd say preferably wait for that bar to close, just because it's also going to be a telltale of like which side is more dominant. Because that candle hasn't yet finished forming, it could easily go back in the other direction. So when that 3 bar forms, you don't necessarily have to wait for it to close. You can simply write it out via Heikin-Ashi. And then going through another indicator that I love, since it looks like we have a little bit more time before I like price action again on SPX. Again, I'm really big on patience. Even if I'm entering on faster time scale, I am notorious for like waiting it out. I'm not going to force a trade because ultimately when you put a trade in the market, you have to realize the goal is going to be to make money. But that risk part that comes along with it is going to be a double-edged sword. If it's not all the way in alignment or it's still not formed for highest probability, you can also lose said money. So still waiting for it to get ideal again for me. But another indicator that I love within my Heikin-Ashi setup are gonna be these order blocks. So that's gonna be like this right here. And then this one that pops up right here. So that order block is basically going to let us know the institutional buyers or sellers started popping into that area. So it can give you confirmation of a trade. So if anyone wanted to take upside this morning, that order block and then holding above EMA line, we started holding above that lower band on VWAP. Next target, same as before. It's very much so copy, paste, repeat. Next target would have been going back into midline. From their upper band, it would have needed to hold up above, and we would have simply wrote it out into next key targets, which would have been that 45 level. It looks like SPX is wicking down to create more of that bottom wick, and then it has breakouts on the 15 under 41 for quick scouts, possibly into 15's EMA. It's not all the way in alignment. Look at the 15 and the 30, looking at the 30 and the hour. So it might be best to wait. If you're looking for higher probability, it might be best to wait for this 30-minute candle to close in the next 7 minutes, going into 11 o'clock. But quick scouts are starting to form on SPX to downside. We're watching 41's level to see if it's going to break for lower lows on the 15. But yeah, next target, what I was saying prior, would have been going into 45. From there, 50. So with SPX, it also has psychological levels. Key psychological levels, there's going to be major and then minor. So minor psychological levels on SPX are going to be anything ending in 5s and 10s. So that's going to be this 77.45. Major psychological levels are going to be anything ending in 50s and 100s. So that's going to be big level. It's gonna, in this current space, it's gonna be 77.50. 7,800 would be the next one. The lower one would be 7,700, so on and so forth. The reason why those are important on SPX is because time and time again, we see that those are areas that attract larger amounts of both buyers and sellers. So a lot of times we see that that opposing player is sitting in to some extent at that level. So a lot of times going into that trade, if we are trading into a major psychological level, I'm really going to be tapping in on Heikin-Ashi on the 1 minute, wanting it to remain supported in order to stay in, and I'm going to want it to remain above that level, ideally in my perfect world. So like if someone took calls this morning, once 77.50 was hit, I would have wanted it to remain supported on that 1 minute Heikin-Ashi. And then I would have wanted it to remain above that 77.50 level. And then same thing that we just spoke about order blocks, how it can provide areas that let you know, like it can be supported. You have institutional buyers or sellers supporting. They also let you know previous areas where they had entered into. So I also utilize them as targets. So going into tops and bottoms of order blocks, that would have been going into 77.58. I would have been watching the trade as that next TP line, in which it got into basically 77.57. And then we see that that doji was created on SPX, started wicking under 77.50. So that would have been time for out if you weren't already. And then from there, we started holding underneath the EMA line. A new 5 minute, it opened up flat on Heikin-Ashi. Biggest thing we're looking for right now in order for a higher probability to form is gonna be Hikanashi on the 5 minute getting back supported. Right now, we have those dojis back to back, so it's not the cleanest price action. We don't have that strength and momentum piece just yet, so we're still waiting. So sometimes trading, especially day trading, it can be put on Instagram, for lack of better words, as like something super sexy and appealing, like, ooh, like you're making money in minutes. A large part of that minutes that you're making money is gonna be the waiting game like this, the mundane, where sometimes cash, or a lot of times cash is the best position versus forcing trades. So what I'll do, just snitching on myself a little bit, is I'll be on my phone and I'll just scroll on social media or something else. I'll go on my Instagram, go through my timeline or whatever, versus trying to force a trade. I want the price action to clear out prior to doing anything. The order block indicator is going to be this right here, order block 15. And then those are some of my other indicators. I don't use CE. Momentum candles I like. It's going to highlight momentum in the market. You're going to know that it has higher momentum if we're shaded in dark green or dark red. If it's hollow, that's not necessarily a bad thing, but I mean, you're going to want it to respect EMA. Swing, that's just basic support and resistance. It gets really messy on the 1 minute, and I am super OCD. So I don't want to see it on the 1 minute, but I do look at it on the 5 and above. Super trend. Super trend in essence is another indicator that I love. In essence, it's just a 9 EMA. I utilize it on the 5 minute mainly. And then what it does is, especially I work with a lot of beginners for my mentorship. And what it does in essence is if you see this green line under the trade, you want to be looking for calls. If you see this red line, you're going to be wanting to look for puts. That's going to mean that we're under that EMA line. And then when you see a switch, like this morning, when you see it switch from red to green or from green to red, if you're not already out of a trade, that's going to be a key sign that you need to get out of a trade. So there's that indicator. VWAP, we already discussed. High-low of yesterday, that's just gonna let us know on this. I only have it on the 1 minute time frame, but it's basically gonna let us know that like higher time frame levels. Yesterday's high-low, monthly high-low, weekly high-low. EMA, 9 EMA, it's pretty basic. And then consolidation zones. Consolidation zones I love on SPX because can utilize this morning as an example. It basically a lot of times snitches on the market, like where it's going to basically be calling BS. So like, okay, like if we're already in a trade, it lets us know to be more on guard because the market is pre-calling BS. It's pre-calling either choppier movement, it's pre-calling reversal or something like that. And then this morning, that consolidation zone puts that triggered really quick into 20, but then we have consolidation zone pop up on that 5 minute time frame. And then from there, market reverse back to upside. And then if we look at price action from earlier this week, we had price action, we had this consolidation zone for hours, letting us know that it wasn't clean price action. That in alignment with Hikanashi, we didn't have that strength and momentum. We had a lot of dojis and it was sideways. That was basically because it was in a tighter range. It was no trade for me. And if someone was like super scalping, I mean, they could go off the 1 minute if they wanted to, but it wasn't ideal. And then I wish price action was more appealing, but I don't want to force a position. But if anyone has questions, Zoom, in person, I'm completely open to that. And then funny enough, speaking of, we just had a consolidation zone pop up on the 5 minutes time frame on SPX, pre-calling some BS. So I'm watching this area. Further confirmation that I'm watching this area prior to doing anything in the market. Any questions? Yes. Yeah, I got you. Or actually, for those that are in person and that just want the chart layout, I don't mind extending it. So I'll send you the direct link so you have everything directly as is. Okay, gotcha. We're good? I'll change. All right. Next question. Hell. This one? Oh, okay, gotcha. Thank you. What's the next question? I think I saw one other hand or a couple. Yes. I don't have any book recommendations necessarily. I'm that are market related, but one of the biggest things that people drastically underestimate in the world of trading, a lot of times in the world specifically for day trading, when you're looking at that faster income, is going to the emotional side of trading. So I know for me, it wasn't always peaches and cream. I'm very transparent of that. It was definitely a journey and it was treacherous. It was for a little bit, especially when learning SPX and trying to find my way within that. And that brought me into stoicism. There's an author, Ryan Holiday, I believe his name is, but he really breaks down in blatant terms and modern terms the principles of stoicism. So I'll give an example. After taking a lot of losses on SPX, like learning it in the beginning, I was scared to enter into trade. Everything would be in alignment. Like I was finally at a comfortable place where it's like I knew what was about to happen in the market, but I had like paralysis. I could not move myself to enter into the market. I was scared. I was shaking in my boots. So he has a book called Courage is Calling that I read and that helps me like overcome it. There's also when I mess up in the market, maybe if I do revenge trade or maybe I force a trade, whatever the case may be, the reality is we're all human. We're going to have those emotions, even though we choose not to act on them all the time. But in the case that we do, or in the case that I do specifically, I like reading like a chapter or two of his book, Discipline is Destiny. I love that book. And it really like reinforces like positivity within the day. He has another book, Daily Stoic, where it has like small excerpts, like maybe a paragraph on two, like talking about a topic on stoicism. So I don't have a, a direct book that's market related, but stoicism, I'm big into psychology and understanding like the subconscious mind and understanding like the internal of what's going on in the back end. So I think it's like breaking the habits of being yourself for agreements. There's something Babylon that I like. I forgot the full name of it, but those are a couple books that I like. That and Atomic Habits, because discipline, how you are outside of the charts, is going to be a lot of time applied to how you are within. So discipline, like throughout daily routine, workouts, if you do that, having some type of routine or regimen is going to help you with trading, especially with day trading. Yeah. Okay. So Richest Man in Babylon. That was really good book. Any other questions? Yes.
Where did you learn spread?
Call me 100K, Kevin. I had learned from him, and then I have like taken that and kind of narrowed it down into a way that works best for me. And then I applied Heikinashi when I learned about that and combined the two. But he's the one that introduced me to the strat. I think I joined like one of like a Zoom call or something of his. And then I was like, oh, this is nice. Any other questions? All right, so that is all. Thank you so much for your time. Again, I apologize. SPX's price action was not so appealing so far. I'll still be live trading with my group, but at least we didn't lose any money. Cash is definitely a position. Thank you. There you go. Thank you. Anytime. You grab it. Thank you. Oh, yes, please. All right, look at you. I think it's There you go. Thank you. Thanks. Thank you.
All right, y'all should be able to hear me on Zoom. I'll let you go.
Okay, back to the Q&A. First question. Once you've fundamentally identified a company you want to own, how do you use technical analysis to determine when you want to buy it?
All right, so great question again. So very, very important that I highlight and share the technical analysis piece. So I want everyone to make sure they had a trading view up. I got asked a lot of good technical questions that I want to be able to provide context and answers to today. So for example, WDC, we covered Western Digital Corporation yesterday. I'm gonna go solo screen. So if you look here, I always start particularly from a monthly time frame and I work my way down. So I go monthly and then weekly time frame. So this is the 1 week time frame up here. How you favorite these time frames, you want to make sure that each time frame is favorited. So I have the monthly, weekly, daily time frames all favorited. 4 hour, 1 hour. So I can easily go to any time frame at any time. Now, when it comes to combining both the fundamentals and as well the technicals. Let me do, for example, WDC on the fundamental side. So this is a stock right now that has a 17 P to E. And we'll go back to the charts here. I look here, particularly down there, the next major support level is not until about 367. So if I'm looking at it, I also want to analyze market phases. So that was one thing that specifically I spoke on, and that's the charting and technical analysis book. Oops, yeah. So get the charting and technical analysis book up. There we go. So the three primary trends: the accumulation phase, public participation phase, and distribution phase. So the mistake from a technical perspective that a lot of investors make is they buy during the distribution phase. So they wait until something has already 10x and then they're looking to buy a particular equity. You want to purchase during the accumulation. I want everybody to say accumulation with me. Accumulation.
That is the phase that you buy in. You buy during accumulation. When the public is participating, that's when the stock is already going on the run. Distribution usually is happening once we peak and we trade sideways for a shorter period of time. And sometimes it could be a little longer. It could be 6 months, 12 months, just as an example, where stock is within the same space. And then it starts to be distributed to the downside. So when you look here, and I can always hide my drawing. So I use this eye right here, the bottom right, bottom left-hand corner that you'll see, and I'll hide my drawings. So notice, this is the time when you want to actually buy. Western Digital Corp was trading sideways since 21 and did that up until 25. But then it broke out, it went from 50 to 80, or excuse me, 50 to 800, right? And so that's more than 10x. This is a company that essentially went ahead and 16x from that point. So now you're looking at a stock that went up 16x at its peak, but now it's retraced 50%. This is an area where you want to know, because during that public participation is all of the capital that's being poured in and bought, and you don't want to get caught in the distribution buying too high. So once I've analyzed a stock from a fundamental perspective, it's now time to look at it and ask myself the question, am I buying this in what phase? Let's use a couple more examples that have maybe recently came to the downside as well too. We could use as well Adobe. Notice what market phase Adobe ended up hitting. Notice it runs majority of 2011 all the way up to its peak in 21, and then starts to trade to the downside from 700 back down to 266. So I'm going to combine my fundamentals and my technicals. Now, what's the simple makeup of any chart? The simple makeup of any chart is going to be higher highs and higher lows, lower lows and lower highs. That's the example right behind me. So I look on the macro level timeframes to decide, is this an equity that is making higher highs and higher lows, or lower lows and lower highs? We look at this: lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. So that's a downtrend. That's the first thing you should be looking at in any stock that you come to the marketplace to look at. Identifying, is it making higher highs and higher lows, lower lows and lower highs? First step, identifying the trend and the structure. If it's making lower lows and lower highs, I understand that it's in a downtrend. That's a downtrend, that's not an uptrend. Uptrend is higher highs, higher lows, higher highs, higher lows. The first things you look at when you're trying to analyze and pay attention to a specific company. First things, market phases, higher highs and higher lows, lower lows and lower highs. Very important. Questions on that? Any questions? Got a question? So on a weekly time frame, majority of the time, you're gonna at least be able to see that at least for 2 to 3 years. Usually when you look at most weekly or monthly time frames, you're gonna at least see 2 to 3 years worth of data. So I'm gonna look at least 2 to 3 years. Yeah.
Would you describe fundamental analysis as determining what to buy and technical analysis as helping determine when to buy it?
Exactly. The technical analysis is going to help you determine when to buy it. So let's go back to one of the examples on the playbook. Let's go down here to MU. Cleve, what was the price I told people to buy MU at? All right. What price is MU at on the screen? 865. So could I recommend MU At 865, right? I'm glad, I heard an unprecedented amount of no's on his left side. Everyone said no. And this is the part of where you understand the market phases. So when I was teaching my son, and I was telling him, I was creating just a really a good saying, and he's walking around telling everyone. He said, my daddy said, if you buy dram, you get rammed. That's what he's going around telling everybody. He's going up telling strangers, yeah, my daddy said if you buy dram, you get rammed. And I told him this specifically to teach him to understand not to buy things when they're overhyped, right? You buy things early. Cleve just said, I recommended memory in particular, the memory part of the semiconductor market, well before there was a mainstream memory shortage. So if memory is within demand, and I'm seeing that a stock that I want to own long term is not in the phase that I believe I should purchase it, I'm not going to buy it. I'm going to allow the stock to retrace back down and find its floor. So it doesn't mean that MU is a horrible investment, but from a technical standpoint, I believe we could drop lower. So Micron Technology, even I have the DRAM ETF, which is an exchange traded fund that directly tracks memory stocks. So it's filled of names like a Western Digital, it's filled of names with MU, SanDisk, and so forth. But if you notice one common pattern here is the momentum is now shifted to the downside. So even where you see how, and I just wanted to share this, you see how we made, you got a lower low and lower high consistently here, being made. So now you just made a lower high. What comes after a lower high? Lower low. So if I break underneath this $700 level, what's gonna happen? I'm gonna make another lower low, and then price reverts downward more. DRAM, same thing. That sequence is lower lows and lower highs. So when I set price levels that I'm looking to buy, now I'm gonna add my drawings back on. The one thing that I learned about charts very early, particularly with equities, anytime they run fast, especially for new people, anytime that a stock runs to the upside fast, trust me, they come down 10 times faster. You'll blink twice and they're filling the gap to the downside incredibly a lot faster. So you look here at DRAM, I would only be willing to buy, right, to answer the question more, I'm only willing to buy not just discounted prices from a valuation component, right, when we look at fundamentals, but stocks that go to what we call demand zones. This is how fast the DRAM ETF came into the marketplace. In April of this year, we were at about $30. By the middle of June, we were at 80. So that's an investment increase in more than 100 and basically about 150% that fast. Over 150%. An ETF that tracks all of these names. So the retracement down is going to be very fast as well too. So profits being taken off the board, you look at MU, which is retraced down from 1255 all the way here to 866. Now I want to give you an example of demand zones holding for 2 decades. I'm going to pull an example up that I always use when I'm teaching. All right, so you're gonna see Exxon Mobil down here, which it came down to $30 here in 2002. So 2002, it came down to $30. I'm gonna show you an example here. Notice how in COVID, when gasoline prices dropped to the lowest level they had been at in a long time, Exxon Mobil went to where? It went to $30. Look at how it bounced off that same level, that same demand zone. So when you combine the technicals and the fundamentals, that's what truly gives you an edge. So I want to buy the most fundamentally sound businesses directly there at about 30, right there. So you see where the demand zone is. That's an 18-year before it retraced and filled the gap.
What do you do when the fundamentals look great and the technical charts look weak?
Oh man, B's on a roll. Y'all give it up for B. This is a good one. This is a good one. When the fundamentals look right, but the technicals don't. That's a good one. Let's pull up an example. So this is a company, Qualcomm, that I'm going to use. Everyone in here already, for the most part, has a Qualcomm product within their hand. If you have an iPhone in here, Qualcomm is directly inside of that product. So for most people, right, in this building, you already have a Qualcomm product that you use all the time. Now, I want to talk about Qualcomm because this actually fits the mold. Qualcomm is a stock with an 18 P to E ratio, very solid. You want that number between 15 to 30. So you beat there. This is a stock that has a forward dividend yield, pays about 2.2%. Not bad. Company that has a $9 EPS almost. So it's a profit-making machine. But when you look at the chart and the technicals, you really can't make much out of it, which is what we're about to go to now. Qualcomm right here, particularly peaked out at about 260, but if you notice, you really can't make much of the chart of what to expect next. It's been consolidating consistently since 2020. It's virtually been in the same spot. So you basically have about 6 years of no upward nor downward direction. So if I have a company that has shown me they're solid fundamentally, but if they're not really experiencing a ton of growth, which is gonna a lot of times lead directly into the stock trading sideways. So it's a business that's at a fair price, but it's in the same spot it was 6 years ago. So this would be an example of a company that I probably wouldn't be looking to really go heavy in long-term investing wise, because it's more of a value name. More value names are gonna be the names that have really great fundamentals, but not really the best movement and technicals. Even a good name in Procter & Gamble, you're not anticipating them to really move much, but they're a strong, fundamentally sound company, right? It's gonna be hard to find much better than PG. So good question.
What happens when the chart looks extremely bull-ish, but the valuation makes absolutely no sense?
Okay, another good one. So I'm gonna use this example, right? The chart looks bullish, so it's perfect, it's pretty, it's beautiful, but the valuation, you can't make sense of it. So if I can't make sense of the valuation, I'm gonna steer clear of it. It might have the right setup technically, but if the valuation is a bit off, I may have to steer clear from it. I'm gonna give you an example of a stock that I believe can go to $1,000, but I'm a little bit nervous about it. Everything lines up right, but the valuation. And everyone put this down, Axon Enterprises, Axon. So Axon Enterprises, you can see this here. The chart looks beautiful. Like, I couldn't have drawn it up much better than what we see here now, right? We have a falling wedge pattern breakout. Mind you, we're on a monthly time frame here. We also had a stock which is bounced off of its trend line from 2022. So a really good tool that you can use on your trading view is right here, this trend line tool. What I'll do is I favorite this tool. I'm gonna watch this real quick. So I call this my tool belt all the time, and I'm on Zoom. So I can move this tool belt around. This can save you so much time, so you ain't gotta keep coming over here, clicking this every time you need this tool. So this tool belt follows me everywhere. And so what I did was I used this trend line tool and I stretched the trend line at a 45-degree angle. Put that down on your notes. Trend lines, always stretch them at a 45-degree angle. So if you draw it from the most recent low, it could be even from previous years ago. So what I did was I stretched this trend line. You notice back here in 2023, price ended up bull, bouncing. Then most recently, in May, we actually briefly got below this trend line, briefly broke below. Then we're looking to actually get above here at 611. So notice this is the rejection point now. Because the stock price hasn't gotten above 611, let me go from the monthly now here to the daily, where I come here and I could draw myself. What we have here is a double top. What I want us to get better at is being able to identify the specific chart patterns. You guys know I love my football analogies, right? So you look at a double top as pretty much cover two safeties over the middle. That's the way two safeties on the back end, of the defense. Then you're gonna have three defenders, which are essentially three backers in the middle. So you're gonna have two high safeties here, first safety here, first safety here, second safety here, Then you're gonna have linebacker here, linebacker here, linebacker here. So you have a 3-2. So when you break over or under, vice versa, because it also can be a double bottom, but when you're breaking down below that neckline, price starts to push lower, which is what we saw, right? So now price is looking to potentially maybe get down to about 479. Double top patterns are bearish reversal patterns. So look at it that way, right? Anytime I see a double top, I know that price is going to be, I don't want to be taking calls into a DT, right? So to a double top, this is a bearish reversal pattern. Now let me get into the part where the chart setup looks really good, more so on the weekly and monthly, but now Axon Enterprises, from a fundamental perspective, I know that this is an overpay. The company has a 226 P to E currently, because the company's earned about $2.40 in EPS in the past year. Now, this would be something, particularly that if you were to overpay, I could justify it. And let me teach you as to why. This is a stock that's anticipated this year to do $7.72. So you would take that 540 and essentially you would, if you go ahead and you divide 540 by 8, you're gonna come out with a lower outcome than what you had with 2. That P to E ratio should be probably about less than 50, a little less than 50. I don't have my calculator in front of me right now, but tell me the math. What's 540 divided by about 8? So, say it again. 67. So 67. Then give me $10.50. Do 540 divided by $10.50. Give me that math. You got 51. Okay, so about 51. So that would take. You see, anytime that earnings number increases year over year, that is going to allow you to be able to lower the valuation. But if I'm willing to pay ahead of time, I'm betting that essentially the stock is going to exceed these expectations, or at least meet it. What happens if Axon doesn't meet these expectations? Axon's going to pull back sharply. So I have to analyze and say, this is a $500 stock, which has the potential, in my opinion, to go to 1,000. Why is that? Let's go back to one of the core statistics numbers. You can, before I even show the outstanding shares number, based upon what you guys have been learning here, do you think Axon is a low float or a high float? Low float or high float? It's a low float. Thank you for that. It's low. Only 81 million shares outstanding. Anything less than 500 million is a low float. So Axon has the potential to be able to go to $1,000 from there. Now, if they can exceed those numbers, this thing is going to be flying over 1,000. Flying over 1,000. So I look at this and I say, does the risk meet the reward? It's about the price you pay. If you were getting this at 350, different conversation than 540. But there's a reason I want to highlight this, because the stock price dropped from 900 almost back down here to 300. But people were able to push this thing back up to basically about $600. Why was that? Why did they buy? I said this before earlier. I said, about the stock market, you learn a lot about price behavior. $900 shoes on StockX come back and go retail for 300. What happens? You sell out. Low amount of supply. When demand exponentially increases, what happens to price? Price runs and rallies. Same thing here with the stocks. I want to find the stocks that have the lowest amount of supply of shares with the most demand for entry. Those are your stocks that are 5 to 10x. So I have to ask myself the question, based upon the technicals, the chart looks amazing, but am I willing to assume the risk? The answer to this question is yes, I would. But only if you have a high risk tolerance would I expect people to follow. Go ahead, bro. Yeah, so you want a low amount of outstanding shares with a high amount of demand. So if I have a gas station around the corner and there's a gas shortage, all the other gas stations in a 10-mile radius are shut down, what's gonna happen to the price of my gas? It's raise it up, because now we the only one who got the supply, but we got a for sure amount of demand. So you might be complaining that you're about to pay $8 a gallon, but your ass is gonna pay $8 a gallon. You know, that's just the way it's gonna be. So the stocks, same thing. Low amount of demand, low amount of supply, high amount of demand. Go ahead, Jacob. Correct, yeah, the speed is faster. Let me talk to you about speed real quick. The speed is faster. That's why, great question that you asked. Any stock that I can look at that has less than 500 million shares outstanding is immediately on my radar. 347 here. When I even look at names like Coherent, which I discussed, this is one that's on the Playbook. And my baby, she's up $47 today. So when you look here, 200 million shares outstanding. How can a stock move $40 in a day? Just gave you your answer. Low floaters, up 14% on the day. So it has that potential. CrowdStrike, which is no longer a low floater because CrowdStrike went in 5x their shares. This is why when it comes to splits increase the supply of shares. So it slows down how fast the stock moves. When they do splits to companies, Netflix, for example, Netflix is not $73. Netflix is really $730, right? If we went back to their most previous split. But they do that to slow down the movement, but to also give you more shares, which does slow down the movement. So I like a company that hasn't split, right? And I want to catch it early enough to be able to hold. Even the names that we rave about today, my nightmare that still haunts me. That 150 shares of, that of AVGO is, that's a nightmare. You talk about seeing things in your sleep, that's definitely something that keeps you up. So you don't want to let go of, this is why I say time and patience, but it comes with delayed gratification. The faster that you have delayed gratification, the easier it is. It's gonna come sometimes with, this market, it'll kick your ass. Anybody who tells you different is lying to you. I've lost hundreds of thousands of dollars being in the market, and not afraid to hide behind it. But I've also been able to make some millions too. So it's a blessing to be able to have been through that. I've been through the ups and the downs, so I know it. I've seen it. I know a 10X before anybody sees it, because I can sniff it out. The same things that they're telling you to sell is the same things that you need to be buying. I've seen it plenty of times. When you understand the fundamentals behind things, it makes it a lot easier for you. The fundamentals are the most important thing that lead you into the technicals. And I used to not like the technicals as much, right? But the technicals were very, 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 very important for you to realize and know, because that shows you where you need to buy specifically on the chart. Any questions? Questions around the room? I know there's some questions, my God. You said where on this one? On particularly here. I got you. Good question. So you want to look particularly on the average volume. So the average volume will show you every 3 months. So notice today, what time is it? It's 11:37. Coherent has already traded more than their average volume already, right? Now on the particular chart, there is a volume indicator. So what I do is I track the volume on a week-by-week basis, particularly of companies. And notice this high amount of volume came also from a technical breakout on Coherent, which was a falling wedge pattern. We discussed that yesterday. Falling wedge leads to when volume rushes in. Notice how, I'm gonna knock it down here to the 4-hour. Notice how a large rush of volume rushed in here. Price ended up rallying and pushing to the upside. So that's where you had this breakout of this falling wedge pattern. Price rallies and pushes. So that's how you can track and see. So anytime I see that volume number grow on a consistent basis, already running and exceeding by 11, 12 o'clock, I know that we're trading consistently above that 3-month volume. That's an increase in volume. Now, also, the last thing that I'll add before we take a break, right? One second. I got you. Right? Last thing that I'll add is particularly a component called short covering. This is where a stock is being, and this is going to tie into the question that you had from me earlier, Katie, right? There's some stocks that might show institutional ownership of over 100%. What happens is that when shorts are covering, when an institution is over leveraged on the short side, that means they go and they're borrowing shares and they're shorting the company down. It can cause a surge in volume, because what happens is that when a stock price goes to the upside, they have to purchase that stock back. So it's called shorting a stock. That is one of the #1 ways that a market cap can be added to equity. This is how Tesla increased their valuation. NVIDIA as well too, because there were people with short positions against the equity. So when it gets squeezed, that's what causes the stock price to run. Nebis, which is a 2027 stock and options play. Nebis is a company that's actually being shorted by more than 5%. You can also find that information underneath the statistics tab. All right, so that's combining the fundamentals and the technicals, adding the volume component as well into it. So, yeah, good question. All right, so we're gonna take before we take a quick break, just have a couple announcements. So first announcement that I have is specifically I'm going to be providing coverage on over 50 companies starting September 1st. So what do I mean by that? I think this has been a long time coming to where I don't think I've done as much honing in on providing the best coverage on individual equities, but I'll be covering 50 companies starting September 1st, where all of you guys will get access into the platform to be able to get my research coverage on all 50 of these companies, and I'll rotate them. Some will be established companies, some won't be. So you guys will have direct access into all of those reports, completely free of charge. So just want to let you guys know, look out for that. Next thing that I do want to add is I do have an event that I am taking part in Chicago, which is at the brand new Presidential Obama Center in Chicago. So for anybody that is going to be in the Chicago area around that time, between August 28th to August 30th, I would love to see you in the building again. And the last thing is, I do have my good friend Chanel, she's in the building. She has some of the best protein that you can find. I'm gonna get 5 of those proteins from you, Chanel, and pass those out. So for the first 5 people, we'll go back there and grab protein from Chanel. Your protein is on me. All right, so that's pretty much it. And we'll take a quick break and we'll come back. Thank you. Don't run too fast now. All right, y'all, so we're gonna go ahead and get ready to wrap up this event. I do want to say thank you to everyone who came out the past 2 days. To me, have been absolutely amazing, wonderful. It's always good to see fresh faces in the room as well as faces that I've seen before. 2027 playbook went out today. First iteration of it, second iteration will drop in the next couple of weeks. I want to see before we get out of here, do we have any final questions before we wrap up for today? Any final questions? Correct. Yeah, so one of them, technically, one of them actually did work out. So it's really 20 out of, now that I'm thinking about it, it's one of them that didn't work out is Dollar General. DG pulled back down. That was unfortunate, didn't work out. The one that was 20 was Amazon. Amazon at the time was 220, but it actually recently hit the target. And the other two, I have to take a look at them. Yeah. Any last questions? All right, if we don't have any last questions, I want to thank everybody for today. As we conclude SummerSlam, if we can get a photo in front of everyone on stage.
Everyone on stage.
Yeah.
Okay, guys, you